So the title of our first battle is How Long Till the ICO Bubble Burst? It's one of those important topics, and we're probably all curious about what is ICOs, in terms of its adoption and how long it will take before it will bust. So two outstanding speakers we're going to have on this morning. I'm going to take turn presenting each of them. The first one is ex-Wall Street professional, the crypto and blockchain educator, research and consultant, Tony Weiss. So please welcome.
Hey guys.
So Tony will be in the blue corner right here. All right, he's going to warm up. And our second speaker is a board member of Atari and president and CEO of Blockshow, Ferri. So please welcome Christian. All right, so I'm going to hand over to both of you guys. Good luck.
Thank you.
Thank you. Hey guys, thank you everyone for coming out.
Thanks for coming.
We'll do a very quick intro. I'll start with myself, then we'll go with Chris. So my name is Tony Weiss. I run a YouTube channel in the crypto space. I've been around since about 2013. Prior to that, I was working in the financial industry down on Wall Street, worked at companies like Bear Stearns, JP Morgan. I was doing that for about 9 years. I have 15 years of trading experience. My job was actually helping to build risk models. And now I travel the world, speak at conferences, and do workshops, educating people how to be responsible traders. And I'll hand it off to Chris.
On the stage with you today. Thanks everyone for coming. My name is Christian Ferri, President and CEO of Blockshow. I have a past in management consulting for one of the big four, serial entrepreneur. Sold a couple companies, got into blockchain about 5 years ago, and has been loved ever since. And been advising, consulting, and now we have a Blockshow. Is an advisory, tokenizations, and capital firm out of San Francisco. Yeah, that's pretty much it, guys. So enjoy the show.
All right, thanks, Chris. So our topic for today is this idea of an ICO, and what do we think about the general concept of an ICO? So I'll open the floor to you, Chris. Take a couple of minutes and give your overall opinion of this idea of an ICO, why a lot of people come to conferences, and why companies want to do ICOs, and do you think they're good for the global ecosystem or not?
Yeah, so I think they're good. I think it's nothing new, to be honest, Tony. We've seen that in crowdfunding, right? It's just a way to democratize investments, to democratize support to projects, whatever they might be, right? We talked about Facebook. Only the inner circle could have in Facebook. But ICOs give the opportunity for everyone to get into and back a great project, right? So that's something that I'm really keen on. It's kind of opening up and distributing power a little to everyone.
Oh, Mike lost. There you go.
I don't think anything is new. We've seen that with crowdfunding. Chris starting up in 2007, 2008. That concept of kind of, supporting a project by giving out shirts and hats and dibs on the product. ICOs are basically the same. The only difference is that instead of getting a shirt or a hat, you're going to get a bunch of tokens. So I'm pro ICO, although there's a lot of bad connotations, bad press given to ICO right now. We've seen a lot of scams. We're going to get into it, but overall, I'm pro ICO and pro democratizations of power. So,
all right, thanks, Chris. I'm going to take the opposite position. I am not a fan of ICOs. I think ICOs have problems on all fronts. The majority of them are outright scams. There are some that believe they are not scams, and I can debate them individually as well if I had to. I've only seen very few that I believe are legitimate. I think they have problems on all three fronts. As far as crowdfunding is concerned, the idea that the little guy needs to be able to speculate in the most speculative instrument possible, I will challenge that idea. I also think they have technological issues, the way they are being built out. And I also think there's like very perverse economic incentives with almost every ICO. And we will run through all three of these ideas now. Probably let's start with the crowdfunding idea because we brought it up first. So this notion that someone is selling their ICO, they're selling their product, and they will stand on stage and they'll try to convince you that you as the little guy should have had an opportunity to invest in Facebook. The Wall Street and the rich VCs and the insiders cheated you from being able to speculate on Facebook back in 2002, and you did not get a chance to get in until it was already on the stock exchange. I find this a little troubling because at the time that Facebook was being pitched to qualified investors, MySpace was already dominating the space. There was MySpace, there was Friendster, there was High Five, there was Wimit, there were dozens of other social media platforms, and I think it's very inaccurate to say that the average Joe would have picked the right winner. I take it back to pets.com. A lot of people think that investing in Amazon early on was the right move. Even Amazon didn't know. The biggest pets.com investor pre-IPO was actually Amazon. They held the biggest stake. So even Amazon didn't know who was going to win. So I don't like this concept. If you want to invest in speculative stuff, we have Indiegogo, we have other ways. But this space, they basically sell these pre-IPO shares, pre-ICO shares, dish them out to their friends, dish them out to the rich people. You're still not buying them early. You're buying them from a guy that got in 2 weeks before you and is unloading their bag onto them almost immediately. And we can debate the merits of these companies. I don't think any of them are actually innovative. It's just a way to print your own money and go public in an unregulated space, even worse than the .coms with a single developer on the back end, even if assuming they even had one other than a web developer. So I'll hand it off to Chris to challenge my view on the little guy investing in things he knows nothing about.
Thanks, Tony. So I hear what you're saying, but I don't think that investors, like the average Joe investor, should be tasked with investing in the winners. Because otherwise, we wouldn't have speculative investments, right? Vegas wouldn't exist. If you all knew what the Amazon and Google today would be, what's the point of investing? You need to have some risk there. The point of ICOs and investments are to allow people to distribute risk and give them power to decide what to do with their money and what projects to get in and what projects not to get in. Are they the same investors that should invest their money? Maybe yes, maybe no. We don't know. But it's not up to us to say. If you have your money and you want to spend it, go spend it. Granted that, obviously, there are no some sort of scammy marketing practices from the ICO side, obviously, and which we've seen a lot of those today, right? In these days, in these years. But granted, assuming that an ICO market itself in a proper way, people should be allowed to decide whether they want to invest or not. And what that does, it allows for innovations to happen. The same way that we see in the internet to come alive. The same way that we see cell phone come alive. Innovation doesn't happen by investments of the big firm backing up, big projects. Innovations happens by a lot of money, a lot of interest, a lot of people seeing a massive arbitrage and putting their money in. Whether or not they're going to bet in the winners on the losers. Matter of fact, the winners are winners because they're leveraging prior technology, prior know-how, prior system protocols and processes than the losers set up the stage for this winning company later on the road. So if we don't have these sorts of early investments that kind of build the infrastructure and the stage for these winners, we're never going to build the future Amazon. We're never going to have the future Google of the blockchain ecosystem. So that's why I'm very pro investments into the ICO space to drive and fuel the technology that we're going to see, that we're going to support the blockchain ecosystem down the road. And sorry, I want to make a distinction. ICOs versus blockchain. It's almost like a Venn diagram, right? So you have the ICOs, and you have the blockchain technology.
You know what? Let's save that for the tech side. After,
yeah.
we're going to make sure that I'm separately.
Right. I want to make sure that I'm pro technology, pro blockchain, not necessarily a speculatory currency that doesn't do anything. Just want to kind of make the point.
Yeah.
Thank you.
I'll just make one more quick point. When I was in graduate school, I was studying financial engineering, and we were basically learning how to program finance. And that's what I was doing on Wall Street, like the math and the programming behind the finance. And in grad school, we had one economics class, and one of the students raised their hand and asked the professor, so professor, I forgot the name of the professor already, and he said, why do rich people put their money in hedge funds so they can simply lose them their money? And that was a very interesting statement that I didn't think about in the future. There are a few hedge funds that continue to beat the S&P 500. The majority do not. The majority of VCs do not beat the S&P 500 returns. Now think about that. The job of a VC is to provide better returns than the S&P 500 that everyone can invest in. And they can't do it. And it's their full-time job to do so. Most of you here have an actual day job. Maybe not you guys, but the average person does. You do not have the time nor the ability to pick winners and losers in a speculative space you barely know anything about. If a professional can barely do it, what does the average person have a chance? You will be more successful putting your money in the S&P 500, where these companies have already proven themselves a little bit, than buying lottery tickets in this space. That's pretty much my final comment on crowdfunding and the solicitation of money. And I like the regulation. You want to invest in speculative stuff? Prove that you are, rich enough and you know what you're doing, and then invest in speculative stuff. And the majority of them lose their money. The guys that made money from Uber and Airbnb, they got lucky. And they probably lost more money investing in speculative companies than they've made. But now they get to sit around a poker table with their rich buddies talking about how they invested in the very early stages of Uber. They're not going to tell them that over the life of their speculative investments, they're probably negative and they've made all their money from an actual business, which is how they were able to put in that position to begin with.
Can I rebound very quickly, and then we move on to
rebuttal and we're moving on.
Yeah, we'll move on. Okay. So I hear what you're saying, but I disagree with that. Who are we to say whether somebody is actually an amateur or a professional? What make that distinction, right? We've seen in the traditional finance, we've seen hedge fund managers lose money all day long. Matter of fact, Tony mentioned that, right? All these hedge funds, they charge you 3 and 30 to lose your money. So, and we can compare traditional finance to blockchain right now, because the returns that you get in traditional finance are much lower than the blockchain and ICO ecosystem. There was a research came out earlier this year that says if you're putting $100 in each and every ICOs that came out last year, okay, by the time of the odds, 75% of the ICOs that actually were launched last year already failed, 75. But if you look at the 1 minus X, means that 25% are still standing, which is amazing rate from a traditional VC standards, right? But if you're putting $100 in all the ICO, every ICO that were put last year, you'll be millionaire today, millionaire, right? And you don't have to have a degree or a CPA or have a Series 7 to do that. You can simply look at the white paper, have a technology buddy that can understand the technology and invest in it. And you can actually do that, and that will drive growth, will fuel innovation. So I'm pro for that.
All right, awesome. Thanks for that. One quick correction. hedge funds that are capable of charging 3 and 30 will probably make you money. That's why they're able to charge that much. Watch out for the hedge funds charging 1 and 10.
Yeah, big time. That's so true. True that.
But let's move on to the tech side of the equation. So I think we all agree that the innovation came from Satoshi Nakamoto with this invention of blockchain, though the word blockchain was simply a useless comment inside the code. What he really invented was proof of work to solve the double spend problem, and that gave us Bitcoin. That has now moved along. We now have proof of stake, and Ethereum wants to go proof of stake. Ethereum built out a platform in order to easily create these ICOs in a matter of hours. And I wanted to talk about, like, are these ICOs technologically innovative, and is this sustainable technology being used to build your company, and the concept of everything needs to be decentralized? So I'll give you the opening word on this, Chris. What do you think about this idea of decentralize everything, plus is it being decentralized in a safe way from the technology side of things?
Yeah, it's a good point, Tony. So we hang out in the same circle, right? And we know the same companies, and we're a bunch of advisors in a bunch of the same companies. Truth is that most of the ICOs, they don't have like disruptive tech. That's the thing.
They do or they don't?
Most of them don't.
Most of them don't. I agree there.
Right. So very few ICO projects, they come out with like some disruptive tech. And what I found out is the reason behind that is most of these projects, like Numerai, for example, or Maker.
I'm not familiar with those. There's like 1,000 ICOs.
Yeah.
Let's pick one that we both know.
Maker.
Which one?
Maker.
What is that?
It's a project in San Francisco to build in a protocol.
But
just gonna give you an example, right? So a lot of the disruptive tech is not looking for ICO money. Some of them do, but most of them go through the traditional routes. So Pantera, Anderson Norwis, Bain Capital, and because it's basically a protocol functions, right? So you don't necessarily need the community behind it. Again, I'm not saying every ICO does not have disruptive tech. I'm saying about 75% don't. You still have to find the 25% that do. They're very hard to find because you need to understand the technology. And there's a bunch of so-called experts out there that's supposed to know the technology. The technology is evolving very fast. We had, blockchain number 1, that's a single chain. Now we're moving on to side chains that are interoperable, all the way down to blockchain 3.0 with DAGs and Adara Hashgraph and so forth. But my point here is the disruptive technology is there. Most of them goes through traditional channels, VCs, hedge funds, and the crypto space. Like Maker, for example, they're only 1 million token. Their token is they used to be worth $1,000 a token. But they went through like traditional channels. This is a lot of money, right? Basis, stablecoin. We got 35 million from Anderson Norwis, Bain Capital, and so on. So if you're looking from an pure ICO standpoint, you're going to find disruptive tech, but it's normally not the bulk. It's about 25% of them. And when I mean technology, I mean protocol layers, layer 1, layer 2, or layer 3.
All right, so I want to talk about the tech a little bit. So I'm going to take it back to Ethereum. So I have 4 major problems with Ethereum. There is a regulatory problem with Ethereum because I have always called them an uncompliant, unregistered security in order to fund their operation. But we're talking about the tech. My other problem with Ethereum is economic. I also have a problem with the concept of the smart contracts. But the economic side, Ethereum can't scale. And if you want to prove that to yourself, please go home and build an Ethereum node so you can validate your own transactions on Ethereum. Because if you are building an ICO on top of Ethereum, you should be validating your own transactions. You should not be trusting a third party to validate the transactions of your ICO. And good luck to build an Ethereum node. A few people can pull it off, but you will need a $3,000 computer with probably, Google Fiber internet connection. And pretty soon even that won't be able to do it. So automatically, if you're launching your ERC20, you are building on top of an insecure technological foundation. So you really have to be careful. Now, if you move on to Ethereum's competitors, whether it's Ethereum Classic, whether it's EOS, whether it's Waves, whether it's, what else is there? Tezos just came out, Cardano. The only reason why they don't have these scaling and technological problems is because they're not as big as Ethereum. But they will have these problems as well. They're not scalable. This is why Bitcoin has a 1 megabyte block size limit and Ethereum has no limit. So you have to be careful from that end. In addition, your own ICO is totally centralized. So you have a huge regulatory risk. You can claim that you're building something decentralized, but at the end of the day, if the SEC comes down and calls your ICO a security, you have the ability to pull your ICO from Ethereum. So this concept that people think your token is technologically decentralized, it's really not. Also, you have full control. You want to print more tokens, print more tokens. There's no technological aspect that regulates you. Besides the fact that there's no actual regulation, there's no technological regulation. Bitcoin is actually decentralized. You can't just make more than 21 million Bitcoins. That's not going to happen. But you can easily print as many ICOs as you like. So there is that technological side of things. If you are building an ICO on any of these platforms, you need to maintain your own transactions somehow and store them locally, because what if Ethereum goes belly up and you don't have which I believe that it will, and you don't have your own record of every ICO and where it moved to, you and your ICO company are in trouble. And my final mention on the technology side of things, all of this stuff that needs to be decentralized, it really doesn't. The reason why Bitcoin is decentralized is because we need a censorship-resistant payment. Smart contracts are not at risk of censorship. So therefore, decentralizing that creates a gross inefficiency. This idea that Uber cars are going to be driving themselves is borderline fraud, borderline like silly, because why would you trust that? No one is incentivized to fix a decentralized system unless they are somehow responsible for it. And if they're responsible for it, then it's questionable if it's actually decentralized. So you got to be careful. Would you put your life in a GPS system that is decentralized and no one is responsible for your life? I don't think they will. I think people will get into a Google car. They know that Google is responsible for that GPS, and they're held liable if that car, crashes in one way or another. So I'll hand it back for some technological rebuttal, though that one is going to be harder.
Thanks, Tony. All right, so first thing first. When we talk about technology, we don't talk about just scalability or decentralization. We're talking about a lot of things, right? Obviously, that's the main concern right now, right? That's the epicenter, right? You say, how can you get a system scalable, but at the same time decentralized, right? So scalability and decentralizations are the main topic, but you have a lot more. That it's part of the technology. For example, security. For example, stability. Right? So let me give you an anecdote here. We talked a lot about scalability today. When less than 0.5% of the entire world population uses blockchain. Why are we talking about scalability now? Why? Granted, I agree with you. Ethereum is not scalable. I would add a time reference to it. It's not scalable today. It might be scalable tomorrow. Although it's sharding and plasma is an extremely difficult problem to solve.
I'm very skeptical that Ethereum will ever be scalable.
Me too. I agree. Very difficult problem. But to me, we don't have to talk about scalability today. We have like, the people in this room are using blockchain. Why are we talking about 1 million transactions per second? Because it sounds cool. Because everybody wants to sell their token. We're not there yet. You guys probably know, you teach me, it's called the Maslow hierarchy of needs. Have you guys heard of it? Maslow hierarchy of needs. Raise your hands. There are 7 needs. What's the first one? What's the first need?
Wi-Fi.
I thought you would have said sex, but pardon me.
Wi-Fi first. Japan is proving that.
There you go. Safety and security. Why? Because if you feel safe and secure, you're not in danger of your life, you can actually move on to other things. Same things for the rest of life, including blockchain. Until we're going to have a secure system, and I'm not talking about just exchanges. I'm talking about your wallet. I'm talking about ICOs. I'm talking about the entire ecosystem. You know, you buy from Coinbase, you send it to the exchanges, you send it to a wallet, you send it to the ICO. The entire thing has to be securitized. Like the SSL protocol in web. When you go on the website, it's SSL protocol, it secures your transactions. In this case, the system has to be secure for people to trust the system. People need to trust blockchain. People don't trust blockchain. Why? Because media keeps saying, exchange hacked, $500 million. ICO scam, $100 million. The system has to be secure. Once you have a secure system that people trust, people will start putting their money in. They're putting their money in. What happened next? People get comfortable, people start using it. What happened when people start using the system? They start go buy groceries and coffee. Well, let me tell you, if you go out and you buy coffee today for $5, and tomorrow you go out to Starbucks and that coffee will cost you $50, is that fair? Is that good? No. So after security, we need to have stability. Right? So that's why security and stability are core to drive mass adoption. Once we have these 2 pillars, we now have mass adoptions, and mass adoptions are going to be good. And now we just start talking about scalability, and now where it makes sense, but it's going to be 5 to 10 years down the road. So I just want to kind of go back to the technology side. We have to think about security first, stability, and finally scalability.
All right, that's a good way to end it. We have about 8 minutes left. Let's grab one more topic of discussion of ICOs, and I'm going to turn this discussion to the economic side of the ICO and the proposition of the ICO. The way I see it is, if your company is going the ICO route, you probably did not have enough money to launch it yourself, and your idea is probably not good enough to approach traditional investment. You also don't want to give up any control of your company. You want to solicit as much money as possible from unqualified investors, and they have absolutely no say in what it is that you do, like a VC otherwise would. And what that leads to is a lot of these companies that are ICOing, they have to make up some kind of an excuse as to why they have a token. Usually, they come up with an idea of a utility token. Ethereum was one of our first utility tokens. You must have Ethereum to use the Ethereum platform. And everyone came back to this idea. You must have my token X to use my platform. Now, the token X, for some crazy reason, fluctuates in value with unregulated trading. Imagine you walked into this casino, and the casino said, you have to gamble only with our tokens, because that's exactly what they do, right? You can't gamble with your dollars, you have to buy the casino tokens that are unique. but each casino token is pegged to the US dollar. Imagine if you had to gamble where every single token every single casino chip fluctuates in price every second of every day. And this is what they're offering you. You have to use a volatile speculative currency or a volatile speculative stock to use our product. Imagine if Amazon did that. Imagine if the only currency Amazon accepted was Amazon stock. Or eBay, the only currency eBay accepted was eBay stock. And the only way to buy eBay stock is to go on E-Trade or Scottrade and buy it through a broker. But E-Trade is a publicly traded company. So the only way to buy your Amazon stock from E-Trade is to first buy E-Trade stock somehow and then pay for that Amazon stock with E-Trade stock, all of which are being traded in an unregulatory way, even with 12-year-olds and 13-year-olds. And I have messages from some 12-year-olds asking me for trading advice because they can do it on these unregulated platforms. This is such a crazy economic model, and eventually people will realize how silly it is, and all of these utility tokens will go away. You can use smart contracts with a stable currency or Bitcoin if you require censorship resistance. I think the economics of the token economy are ridiculous. It's like each person creating their own language and asking people to only speak to them in their language. And final rebuttal on that, on the economic side from Chris.
Yeah, so from an economic perspective, I go back to what I was saying before, and I want to leave some time for questions. We have 4 minutes left, but I'll be brief. To me, ICOs are just a means to an end. And the end to me is innovation. It's another way to drive innovation, drive growth. So I'm pro for it. Should we open up for questions?
Sure. We got about 4 minutes for questions. If anybody wants to come up to the front and ask a question, we'll give them one of the microphones. No, we don't need one. I'll give them mine and we'll share.
Sounds good.
I'll give you mine and we'll share one. If anyone wants to come up and ask a question, go for it. All right, we got Ken Bozak here. All right, come on up, grab my mic. If anybody wants to ask the next question, just come right behind him and he'll hand the mic off to you.
I love your socks, by the way.
Thank you. All right, hey, how goes it? Ken Bozak. My question is, has there ever been a successful ICO that has actually done anything with the money they have raised at all? You said 75%. I feel like 99% of them are shit. Just wondering which ones aren't.
Yeah. So it's too early to tell, right? They got their money right now. They're building. I know, for example, Tezos. They're working hard. They got that situation, right, in Switzerland, all the scandal that happened, but they're now heads down building, right? I'm a good friend with Kathleen, the co-founder, so they know that they're really building. But you're right, there's nothing that proves. Yeah, a lot of money. It's just we haven't seen a lot of that, right? And I agree with you. That doesn't necessarily mean that ICOs are bad, but it's a good point. Point well taken.
I'll jump into this as well. I do not measure success by the amount of money it raised. So I don't consider Ethereum is successful in siphoning money from unqualified investors. So if you call that success, that's fine. EOS hasn't built anything. I don't consider that success. To raise $4 billion, yeah, it's a success for the guy raising that money. It's not a success. So I will say I've ran across one ICO token, more like a security token, that I have not found very fraudulent. I'm in the middle of discovering another one. I don't want to give a name just yet. So I like the idea of a BCAP token. I don't like VCs. I think putting your money with a VC is a way to lose your money. But if you legally have the money to put with a VC, that's fine. So a BCAP token, they took $1 increments as a small part of a VC round, and they invested your money in blockchain companies as professionals. And each token represents $1 investment with a VC that got reinvestment. And that token should be worth slightly above $1 or slightly below $1. I think that's a reasonable model. Its valuation right now is ridiculous. All right, we got one more question. We got a minute and a half.
Okay, so you say that Ethereum can't scale, but the infrastructure is growing every day. How is... okay, so the way I see it, Ethereum is going to find its place. All of these ERC20 tokens, sure, some of them are going to be ignored, but for the most part, we're looking at the real revolution. The last thing you said was that creating an E-Trade account just to use the person's token is going to be something that people can't do, but we're getting into the stage where you can just automate currencies across. So of course people are going to have their own currency, their own language. People are going to be speaking across languages because they can automate the transaction between what they have and what they want. How do you not see this being the absolute future?
All right, let me 30 seconds. So the only thing that's happening on Ethereum is more transactions. There's no actual technological innovation. The Ethereum, they're still debating on Reddit what kind of inflation model they're going to have for the Ethereum tokens. Like there's no actual technological innovation happening there, just transactions. As far as all of these still being connected to each other, no. If Ethereum succeeds in their smart contract ways, someone will copy the open source code, maintain it, and replace all of Ethereum without the Ethereum token, because the Ethereum token is just unnecessary, assuming they succeed in proving to the world that smart contracts are useful.
Thank you very much.
Real quick. I just say that Ethereum was the
30
first
seconds.
project, and I think thanks to Ethereum, we had such a great community of blockchainer and everything, and I think that the first one to try, right, might not be the next Amazon, but at least it gave start to this great community. We should be thankful for that. Now, it's not perfect, but nothing is perfect. So, it will evolve as everything in life.
Okay, thank you very much.
Thank you so much, guys.
Let's have a round of
Thank
applause. Tone Weiss and Christian Ferri. Thank you, guys. Thank you.